Hey, what's up, guys? It's Larry, the mortgage guy, your mortgage insider, and certified veteran mortgage advisor. Bear with me. I'm going to check to make sure my sound works real quick because sometimes my sound is not working the way it's supposed to. So I got a notification here. Let me see if I can hear myself talking. Certified veteran. Okay, I do hear myself talking, so we're good to go. Again, this is Larry, the mortgage guy, your mortgage insider, and certified veteran mortgage advisor. And I really appreciate you guys being on part of this call. And today we're going to talk about quick tips for veteran home buyers using the VA loan. Okay. So, of course, you can ask any questions anytime you want. You can unmute yourself. You can put it in the chat, and I'll do my best to address the questions. Since essentially this call is for you and the information you're seeking about the home buying process. Okay. All right. So again, home buyer secrets, most loan officers and real estate agents won't tell you. Okay, there's my information. If you have any questions, always ask me later. Also, wait until the very end of my class after Q&A, and I'll tell you how you can save $500 off your closing costs when you buy a home. In fact, we're actually offering more than just that. So if you wait to the end, I'll let you know what you can do to save money on your current home purchase, whether it's towards your closing costs or interest rates, etc. Okay. All right, so let's just dive right in. Who's eligible for the VA loan? Okay. Now, this chart is very specific, right? So if you as a veteran served during this time with this amount of service, then you will be eligible. But I'm going to talk more on the general side, right? If you are an active duty member, 90 continuous days or 181 during peacetime, you would be eligible. If you're active reserve or National Guard, you have to have 6 years in selected reserves with 16 points. If you're an unmarried surviving spouse means you were married to a veteran who had died due to service related causes, right? Now it says unmarried. If you remarry before you're the age of 57, then you would no longer be eligible. But if you are above the age of 57 and unmarried, and then you get married, then you would be eligible. Why is it 57? I have no idea. The people I've asked, they don't know. So that's just the number that the VA came up with. So again, if you are unmarried, surviving spouse, and you're over the age of 57, of course you're gonna be eligible. But if you get married after the age of 57, then you still would be eligible. Okay, and of course POW MIA spouses, the veteran must be a POW or MIA for at least 90 days. Okay, certificate of eligibility is how you determine what you're eligible for. Okay, this is the document from the VA that confirms your eligibility for the VA home loan. It's obtainable through e-benefits or directly from the lender. In fact, I actually ask every single veteran applicant if they have the COE. If not, then we can pull it for you. Okay. Uh, the documents needed to obtain a COE is you have to have, if you're an active duty, you have to have a statement of service or current orders. If you're an active duty veteran, DD 214. If you're a National Guard, NGB 22 and NGB 23. And if you're in the reserves, statement of service or a point statement. Okay. And this is what it looks like as an example. We call it the golden ticket, right? Because it provides any and all information required to determine a veteran's eligibility. There's two distinct factors to consider. Okay. And eligibility is what you earned on the VA loan benefit. Okay. And the qualification is what you qualify credit wise and income. So those are two different things. Okay. What you're eligible for is what the VA is saying that you're eligible to borrow up to for 0% down or financed by the VA. What you're qualified for is what us, the lenders, help you decide. So basically, we take your credit information, we look at your income, we look at your liabilities, and we decide what you're eligible for. Okay, hold on 1 second. All right. So it's possible to be eligible and not qualify, but it's also possible to qualify and not be eligible. So speak to your lender about that. Okay. All right. Entitlement misconceptions. Okay. One of them is you can only have one VA loan at a time. Okay. A second misconception is if you foreclose on a VA loan, you can never have another VA loan. And number three, the VA has a max loan amount. Right. So the one about the having more than one VA loan at a time. Okay, you can actually get a second VA loan because you can calculate the remaining entitlement based off of your COE and determine the max loan amount with zero down. Okay. And in fact, the crazy thing, and this is something I don't talk about enough, I probably should, but I was actually able to get a veteran a second home within months of buying their first home using a VA loan. So what I mean by that is they actually bought a house using the VA loan. It wasn't their dream house. They just bought it because of the crazy market and they just didn't want to lose on the house. They bought it and then they found their dream house a couple of months later and they were turned down by the lender saying the lender would not be able to help them with two VA loans. They came to me because of one of these calls. Someone saw this call and they referred them to me. I actually pre-qualified them. We sent their file to the VA and asked them or explained to them the situation, and the VA approved it. So that person has two VA loans on two different houses that are primaries. Okay, so it is possible, and in fact, the impossible is possible, right? And what I mean by that is a lot of lenders were like telling me I was lying, or like I said, the first lender denied them saying that it's fraud. You can't do that, but it's possible. If it makes sense to the lender and you can explain it to the VA, then they can approve it. Okay. So you never know, right? Can the loan amount be higher than the maximum loan amount determined? Okay. So there's actually two parts of this question. You can always buy more than you're eligible for, just that you have to pay a down payment to bridge the remainder. So let's say the county loan limit, and I'm just using very loose round numbers, is 500,000, right? And you want to buy a $600,000 house. So the VA will guarantee up to 500,000 because that's the county loan limit. The extra 100,000 you would actually have to cover with your own down payment. And because the VA guarantees up to 25%, you have to come up with 25% down payment. So if you have $100,000 extra, you have to come up with $25,000 on a $600,000 loan. So it's still better than a typical situation. Now, another way to answer this question, because can there be a loan limit higher than the maximum loan amount? The truth of the matter is, if it's your first use on the VA loan and you qualify, there is no max. So if you qualify for $1 million house and you qualify basically in terms of your income and your liabilities, then you can buy $1 million house at 0% down with the VA. Okay, that's just how it works. Now, if you have your VA already charged, meaning you have a home already with the VA, then no, you can't do that, right? But if it's your first use, or let's say your eligibility is cleared, meaning you've taken care of any VA loans you had in the past, and you're back to full eligibility or full entitlement, then you can still buy with basically no max. Okay, my company can do up to $2 million. Okay, on a VA if you qualify. Okay, so the third misconception is, can I apply for VA loan after a foreclosure? People say that you cannot. There's a 2-year waiting period before a veteran can be eligible again, right? The entitlement from the home that was foreclosed upon will not be restored. Okay. So let's say you bought a $200,000 house and you foreclosed upon it and your eligibility is up to 500,000. Well, you can actually buy another $300,000 house and get zero down. But anything beyond that, you would have to come up with the extra or the difference, because 200,000 has already been charged due to the foreclosure. Okay. Of course, there's extenuating circumstances that can shorten the wait period. Instead of it being 2 years, it can be down to 1 year. But it involves a manual underwrite, which my company does do. Okay. And that's something that a lot of people don't realize or understand. There's a manual underwrite process that can almost find exceptions where normal guidelines would actually deny you. A manual underwrite may actually be able to approve you. Okay. It's basically subject to what the underwriter decides, if it makes sense, and they can document it for the VA. Okay. So the restoration of entitlement is the point is the VA loan can be used more than once. Okay. Full restoration of entitlement requires payoff of existing VA loan and transfer of title, and the veteran must obtain a new COE. So, like I said before, if you foreclosed upon a house, obviously you're not paying that house off, right? So you can't restore that part. But let's say you bought a house with a VA loan and you sold it, right? Well, the hope is you sold it enough to pay off the VA loan, and therefore you restored your entitlement. right? And your COE has to show that it's clear, which is actually really easy. You can probably go online, just click you sold the house and request a new COE, and it'll show that it's fully restored. Okay. So quick tips for veteran buyers using the VA loan. Number one, there's no credit score requirement for the VA. I don't know if you knew this, but the VA themselves do not have any kind of credit requirement whatsoever. Okay. It's an overlay created by the lenders. So most lenders have a number that they're comfortable lending on. So 580 is where we start. But some places might have 600, 620, whatever, right? But the truth of the matter is there's no credit score limit. In fact, in the past, I've actually closed a veteran on a 503 credit score with no money down. Okay. So it's possible. Probably requires some sort of manual underwrite, and it's just best to speak to your local lender about that. Okay. But just so you know, there's no credit requirement for the VA. Okay. There's no max loan limit if you have full time. And I actually talked about this earlier. If you qualify for $2 million, and this is your first use on the VA loan, the VA will finance $2 million with no money down. Okay. That's kind of a crazy rule. And one of the reasons why I love the VA loan. Okay. You're allowed to borrow money to help with closing costs. A lot of people don't know this, but in many cases, most loans, you're not allowed to go into debt in order to pay for your down payment, right? Like, oh, you got to put down $10,000. Well, let me go take a loan out. That's not how it works for most loans. Okay. But the VA, if you qualify for both payments, meaning your mortgage payment and the payment to borrow money for the down payment or closing costs or whatever, then it's allowed by the VA. Okay, because they make sense. They use make sense underwriting. Like, well, he can borrow the money for the down payment if he can afford to make the payments towards that loan. So why not, right? So something special about the VA. Okay, which is something that I didn't know until like a year ago, which it blew my mind when I heard it. Okay, uh, you cannot use the VA loan to buy investment properties. However, there's nothing stopping you from renting your old home. Okay, there are restrictions. And what I mean by that is, let's say you are a veteran, you're buying a house with a VA loan. Of course, it requires primary occupancy. That means you must live in the house. That's your house, right? You're not buying it for any other reason except for you to occupy, and probably more than likely with your family if you have any, right? However, after 12 months, you can rent that house out and no one's going to say anything to you. Okay? As long as you occupy them for 12 months, you're okay, right? So I put right here, if it's done right, you can buy primary homes with a VA loan, eventually rent it out 12 months after 12 months and buy another primary with a VA loan. Okay, so basically you're creating investments with zero down, rinse and repeat. So for example, let's say I buy a house. Let's say I buy this house, right? That I'm in right now for zero down. I live in for 12 months and I decide I want to buy another house, right? It has to make sense why I'm buying a second house. Maybe it's a bigger house, a better neighborhood, whatever. It has to make sense. But let's say I buy that house for zero down, right? I can keep this house and rent it out, right? The easiest way is to refinance it into a conventional investment property refinance, but you're not required to do so. You can still rent it out if even though you have a VA loan on it. But the reason why you might want to do that is because you want to free up your entitlement so you can spend more on your next house, right? But let's just say this house cost me $100,000. I bought it for $100,000 at zero down. I lived there for 12 months, and I decide to buy another house for $200,000. Well, if the loan limit is 500,000, I still have 400,000 to use towards the VA in terms of zero down payment, right? Towards the guarantee that I can get or I'm entitled to, right? So I buy the second house that's $200,000 again at zero down. I can rent this house that I bought 100,000 12 months ago and live in this house, and then I can do the same with that house. Let's say I decide to move out of that house to another $200,000 house at zero down, right? Because I have $500,000 entitlement I can use, right? So then I buy a second house at $200,000. I rent out the second house. So the third house I now occupy as a primary and I have two investment properties. Okay, you're allowed to do that, especially if you qualify. Okay, so that's kind of a cool way to become an investor if you are a veteran using the VA loan. Okay. Crazy exception story time, because I know a lot of people, they might get tired of charts and facts and figures and whatever. I'm gonna tell you stories because maybe that'll help you remember. Okay, I've actually successfully helped veterans buy a home using a VA loan months after using the VA loan in the same area. And I told you the story earlier, right? I had a client who this is literally what happened. When she called me, she told me I'm in a house I bought with a VA loan and I'm not in love with it, but I found the house that I love and I want to buy with a VA loan. Is that possible? And I go, I don't know, have to see, but maybe. And she goes, well, I actually wanted to buy this house that I'm in right now with a conventional, but the lender said it was too late because I already went under contract as a VA loan. From my perspective, the lender was just lazy. They didn't want to do anything about it. But I guess there's some to be said about flipping the loan. But I don't know why someone would be against flipping it to conventional. But anyways, I don't know the lender. I don't know what's going on. But the borrower did try to flip it to a conventional, and the lender said they're not allowed to do that. So when they found the dream house, they're like, "Hey, I want to buy this house with a VA loan," and the lender said, "No, absolutely not. You cannot do that. It's fraud." Right? It's considered fraud to buy a VA loan, a home with a VA loan, and then try to buy a second home with a VA loan. Right? Both of them being primary. It's fraud. You can't do that. It's illegal. Yada yada yada. Right? So I did a class like this talking about how you can use the VA loan multiple times, and someone saw it and referred me to that person, and I took the person application, and to me it kind of made sense. But worst case scenario, we're gonna refinance the current home to a conventional, right? Maybe even a conventional investment, so they can free up their entitlement to buy the second home as a VA loan, right? Well, we didn't have to do that because we explained to the VA the situation. They bought a house because they were afraid of being homeless, not the dream house. They bought it, and then they saw the dream house and they want to buy that house, even though it's within 15 minutes away, and the VA approved it. I have proof I can show you. Okay. And again, when I talked about this, lenders were telling me that I was lying. There's no way. It's BS. Nope, we made it happen. So again, crazy exception story time. I've successfully helped a client buy a home using a VA loan months after using the VA loan in the same area. Okay. Um, Second story is I constantly save veterans $400 to $8,500 on closing costs, even if they do not do the loan with me through my coaching and my guidance. And I'll explain to you how I did that, right? So there are veterans who are purchasing a home using some of these, veteran friendly lenders who charge a percentage in terms of origination. So they're going to charge 1%, right? Well, if you think about it, $1 million house, that's $10,000. Okay. So they're being charged $10,000 to do this loan with this lender because they're charging a 1% fee, right? Well, I charge under $1,400, like $13.95 or something like that, for the same service, for the same fee, right? For $13.95, whatever. So in that example, when they went from that lender to me, I saved them $8,500 in closing costs, right? Not very complicated at all, right? So, of course, I'm pretty sure I have a slide that talks about this, but the advice is avoid the percentage origination fee lenders because they're going to overcharge you. Unless you're buying like a $60,000 house, and of course, you're a better deal with the well, actually, $100,000 would actually be a better deal. If you buy $100,000 house, then maybe paying $1,000 is better than paying me 1,400. Okay, who knows, right? But if you're buying a 200,000, 300,000, 500,000, $1 million home, you're getting, or I don't want to say you're getting ripped off, but you're getting ripped off. You're paying more at 1% versus me, which is it's a flat fee. It's the same number no matter you're buying $100,000 house or $1 million house. Okay, so that's how I constantly save veterans $4,800 because they're going with me instead of with the 1% origination fee lender. Okay, and I actually helped an unmarried couple by using a VA loan when other lenders said it was impossible. And what I mean by that is, hey, I'm going to help this veteran buy with his fiance. Are they getting married? No. Well, then you can't do that. That's not how the VA loan works. Yes, it is. I found out and I made it happen. Okay. And I'm going to show you again in a few slides. Okay. More of the story is certified veteran mortgage advisors are trained and held accountable for knowing the VA loan inside out. Okay. So make sure you work with a VA lender who originates their loans using the best method to structure closing costs. And that's what I mean. Instead of you paying 1% on your entire loan amount, you pay a flat fee. Therefore, it makes it easy for you to close. Okay. And lenders who know everything do not know that there are possible exceptions. Like I said, I actually told uh, another lender that I was going to help a veteran, buy a house with a fiance, and they said it's impossible. Well, impossible in their world because they don't know everything. Okay. But they think they know everything, but they don't know that there's possible exceptions. Okay. Most lenders do not understand. The VA handbook and guidelines only speak on what can't be done, but they do not address what can be done. So what that means is that they tell you what's not allowed, but they don't really tell you what is allowed. So really the realm of possibility is really high, is great, right? The possibility of something happening is very high because they don't tell you this is yes, this is no, period, black and white. No, it's black and white on the you what can't be done, but it's kind of open, it's kind of gray on what can be done. Okay. So the VA is willing to consider any loans as long as it makes sense and is well documented and explained. Like in the example of me helping that veteran buy 2 houses using a VA loan. Okay. The guidelines do say you can't buy a primary and then buy another primary because that makes no sense, right? That's like, why do you have 2 primaries? That doesn't make any sense. But we explained it. We said this house is not their dream house. This house is. They can afford both houses. They don't need to rent this. They're not trying to make money off of this house that they live in right now. They just don't want to be in it. They want to be in this house because it's their dream house. It's in a better neighborhood. That's where they wanted to live. That's the ideal situation. That's the home that they want. And this house is just going to sit there. And the V is all like, makes sense, right? Again, the V is willing to consider any loan as long as it makes sense and is well documented and explained, which we proved. Okay. In the words of Bill White, who is the godfather, right, of the VA loan. He's the one who created the VA loan, or actually was a part of it, whatever, right? He was there in the beginning. I would suggest the best training guide already exists. The Lender's Handbook, Chapter 4, is the primary tool for underwriting VA loans because it encourages flexibility in delivering the VA benefit. It gives wide latitude to lenders. The expectation is that lenders, especially lenders with automatic authority, will use their own judgment when necessary. As long as lenders document their reasoning, it's extremely unlikely VA staff would ever take issue with their decision. Okay. So we deliberately promulgated wide-ranging credit guidelines rather than attempting to deal with minute scenarios. This way, lenders can use their judgment and expertise when processing VA loans. Again, they are basically empowering us, the lenders, to put the file together. And if it makes sense to us, there's a high chance it's going to make sense to the VA. Okay. So why do I want to help veterans? Why do I teach classes about veterans? Why are we even having this class? Because only 24% of qualified veteran homeowners are currently using their VA home loan. That's really the reason why. That means out of 100 veterans, only 24 of them are using their VA loan. That's ridiculous. That means there's 100 home buyers out there who qualify, but only 24 of them are using the VA loan. So maybe the other 76 are not even wanting to buy because they don't know that they qualify for anything. Okay. Less than 5 years ago, only 12% of veterans were using their VA loan benefits, but is slowly growing due to the awareness among internet savvy veterans, which is what I'm trying to do. I'm trying to throw content out there. I'm a content creator about the VA loan. I'm trying to get the word out. Okay. You can buy. There's a possible chance that you can buy as a veteran. Okay. 33% of veterans that have a mortgage indicate they did not know about the VA program. This is stupid. Like, out of 100 veteran who have a mortgage, 33 of them did not know about the VA program. How is this possible? That means 33 veterans out of 100 had to put a down payment when they didn't have to, right? We must do better as lenders and real estate agents, by the way. We must do better to serve our veterans because there is a benefit that's not being used, and it's the lack of education, lack of information, lack of effort, really, on our part. Okay, 46% of veterans reported their lender had not brought up the VA loan option. That's almost half. That means out of 100 lenders like myself that was talking to a veteran, like a veteran was in front of my face or on the phone or whatever, 46 of those veterans said that their lender did not even bring up the VA loan. Why? Is it because of they don't know about it, or they're afraid to talk about the VA loan, or they're just lazy? I mean, why would you do that? Right? 0% down. They earn this benefit. It is your duty to tell them about it. Right? And I would love to tell I would love to tell the person in front of me, hey, guess what? You can actually buy a house with no money down. You become their best friend for life. Right? So it makes no sense. To me, it's a fear thing. Like, lenders are afraid to talk about the VA loan. Maybe they think even though it's unfounded, that's an inferior loan, or maybe they're afraid of it. They don't understand it. They don't want to originate or structure or attempt to do a VA loan because they don't know about it, right? It's bad, right? All right. So I talked about how I helped an unmarried couple buy a house, right? That means a veteran and a fiance. Okay. Using the joint loan. I did not know about this loan until I became certified. And I'm very embarrassed that I've actually turned people down because I didn't know about this joint loan, right? When a veteran came to me, several veterans came to me and said, "Yeah, I want to buy a VA loan and I want to add I want to add my fiance, I want to add my girlfriend." I'd be like, "Sir, ma'am, whatever. Sorry, with a VA loan, you have to be married in order to use it, in order to add the person." And they didn't go forward with the loan. I was wrong. Using a joint loan, you actually buy with an unmarried spouse. It doesn't even have to be a spouse. It could be a father. It could be a relative. It could be whoever, right? But the point is, you actually can buy using the VA loan when not both people are going to be veterans or not married, right? It requires prior authorization from the regional loan center, which is basically the VA, right? But there's a down payment required. That's the one thing, right? Because the VA wants to guarantee their houses at 25%, up to 25%, right? So $100,000 house, they want 25,000 guaranteed. And the whole point of the VA, they don't lend money. We do, the lenders, but they're saying that if the veteran were to default on the loan, they will vouch for the veteran and pay $25,000 to the lender. So there's an IOU situation if the lender were if the veteran were to default. If they don't default, then there's no need for money exchange because the loan got paid off, right? But if there's a default, then 25% is guaranteed. So in a joint loan, it's like a partnership. You have the veteran and then you have the non-veteran buying the house that's not married, right? That person is required to cover the rest of the guarantee. So you split it. 25 divided by 2 is 12 and a half. So the non-veteran, non-married, non-veteran has to come up with 12.5% or their part or their half of the down payment, their part of the guarantee. Because again, the VA wants every house to be up to 25% guaranteed. Okay. Um, does the math make sense? Well, it really depends, right? It depends on the house, depends on the income and such. Why would you do that? Well, maybe because there's benefits on using a VA loan that are not beneficial if you go FHA or conventional, right? It's worth taking a look, right? Now, the thing that a lot of people have to remember is you can't set it up where the non-veteran is the majority of the income or the strength of the income. So it says in the guidelines, the income strength of the non-veteran cannot compensate for the weakness or the income weakness of the veteran. So you can't have like a veteran that's making no income do a joint loan with a co-borrower with all the income. That's not how it works. Okay. You could do the opposite. It could be a veteran making all the money and then a co-borrower that makes maybe $1 a month. That's okay because the veteran is carrying the majority of the income and basically the majority of the responsibility, right? So it can be veteran has the income strength and the non-veteran doesn't, but it can't be the opposite. It can't be the non-veteran having the income strength and the veteran have no income strength, right? So that's something you have to remember. Okay. All right. So this is actually tips for all home buyers. Okay, but it applies, of course, to veterans. Make lenders compete for your business for the best rates. And I'll show you the next slides, but I actually delete those slides. But if you do want access to that class, it's a whole other class that I can teach. I'll give you the link to my YouTube video or my class that I have streamed someplace else. Okay. But basically, you should make lenders compete for your business for the best rates. Okay. APR is actually more important than rate. Double check both. That's why I actually laugh when someone says, "What's the best rate?" I'm like, you don't even know what you're talking about. Okay. Rate is nothing. Rate is just a small piece of what you really need to know. You need to know about the APR, right? If you're a savvy, intelligent, well-researched home buyer, you should be asking what's the APR, not the interest rate. Okay. Because interest rate could be whatever they want it to be as long as you're the one to buy it down. Right. And they could be like, yeah, the rates are in the, let's say the rates are in the sevens. They go, yeah, the rates are in the fives, but they're not telling you that it's going to cost you some money to buy it down to a five. Right. That's where APR answers both questions. APR tells you the rate at five, and you're also going to be paying this to get the five. Okay, so that's why APR is actually more important than rate when it comes to finding out who's the best lender in terms of price or whatever. Right, so you should double check both. The only way to get a real quote, so you understand, again, I think it's silly when someone asks me what's the interest rate if they're not ready to lock, if they don't have a contract. The only way to get a real quote is to get a locked loan estimate. Okay. So what I mean by that is if you don't even have a house yet, you're still shopping lenders. You ask me what's the interest rate. Whatever I tell you is going to be different the next day. It's going to be different that by the time you actually get under contract. It's going to be different by the time you close if you don't lock right away. Okay. So the only way to get a real quote is to get a locked loan estimate. Locked. Okay. So if you're trying to compare, right, and you have a lender here give you a loan estimate, but it's not locked, you say, hey, lender number two, I got this loan estimate. I'm gonna be like, well, that's not a locked loan estimate because that number means nothing to me. And in reality, it's just the advertisement. They say it's not worth the paper that it's printed on, right? That's the truth because it's not locked. It can be whatever. Because let's say they tell you the rates are in the rates are in the sevens right now, and they tell you it's a five, and then you try to lock it, and the rate ended up being a six. You're like, wait a minute, you told me it was a five. It's like, well, yeah, that was yesterday's rates, and the market has shifted and changed, so now it's a six. That can happen. So when you agree with me that if someone told you it's a five and the next day ends up being six, then the five is a useless quote. That's what I'm trying to tell you. Whereas if you lock, then it doesn't change for whatever the lock period is, whether it's 7 days, 15 days, 30 days, 45 days, 60 days, whatever it is, right? But it's locked. It cannot change. Okay. So that's why it's important to get a locked loan estimate because it can't change at all. So I'll give you a reason why you want to do this. If someone likes to BS, right? And let's say you're doing a refinance, for instance, and you have an application and everything like that. You applied, they have your address and everything like that, and they tell you the rates are in the fives, and they're BSing. They're not really telling you the whole story. They're in five. You'd be like, okay, great. I want you to lock it at five. They have to lock it. But if they lie to you, then they have to come clean. Oh, I told you it's five, but it's actually going to cost you this much, right? And that's when you get the truth. Okay, is because you're asking for them to lock it, right? But if they don't need to lock it, they can tell you whatever. They can tell you it's a five, and you're not going to lock it because you have no application with them, and they can tell you something different tomorrow, and it's okay. They might be telling you the number just to get you to come back to them. They might be telling you the number so that you can basically tell other lenders, oh, this person said it was a five, and they're like, well, I can't touch that. So you end up marking them off the list of people that you might want to work with. And you go back to the five guy, and when you try to lock it, it ends up being a six. Well, he actually just kind of bait and switched you. Right? That's why you want to get locked loan estimate because no one can lie to you at that point. Okay. All right. Never use a lender who charges an origination fee as a percentage. And I kind of talked about this earlier, right? If you are buying $1 million house with a VA loan and you're going to charge 1%, that's $10,000. Why? When I charge $1,395, and I don't even know if I'm the cheapest, but I'm $8,500 cheaper than that lender, right? And also, when it comes to the VA loan specifically, if you get charged 1%, you can't pay for anything else, right? Like in terms of closing costs, there's a rule that the veteran can only pay up to 1% in terms of closing costs. So anything beyond that, they cannot pay for. So let's say a pest inspection is involved, right? Well, the veteran can't pay for the pest inspection because they've already used up their 1% of fees that they're allowed to pay. So now someone else has to pay for the pest inspection. And that's why a lot of people don't like VA loans because they have to pay for fees that they wouldn't pay if they were going conventionally or FHA. Well, the way I set it up, you have $1,400 for origination fee. You still have $8,500 to do whatever you want. You can pay the pest inspection fee because adding the pest inspection fee on top, which is $150, by the way, on top of the $1,400, does not reach 1% of the loan. Right? Like again, the max is you can get charged 1% on a VA loan. So unless that pest inspection costs $8,600, you can pay for the pest inspection. Okay, and that's why it's better to structure a loan with a non percentage origination fee lender because there's flexibility there. Okay. All right. When making offers, make the price higher by the maximum seller concession allowance, then ask for that amount from the seller. Now, this is more in a competitive market, which might not be the case today. Today, you actually might be able to negotiate. You might be able to get listing price and ask for concessions as a negotiation, right? Or as a counter, whatever you want to call it, right? But in a hot market, you actually figure out what's the maximum seller concessions allowance and ask for that amount on top of the seller, right? and then add that on top of the price. So let's say you're buying $100,000 house, the max concessions for FHA is 6,000 because it's 6%. So instead of offering 100,000, you're offering 106,000. The seller ends up netting the same amount, right? Whether they sold it for $100,000 with no negotiation or $106,000 with 6,000 in concessions, right? They still net the same amount. So that's a really cool way to get some of your closing costs financed or paid for by someone else, right? So that's what that advice is about. Now you can lower your interest rates with using seller concessions, which a lot of people don't know. It's called like a rate buy down or whatever you want to call it. But sellers can help pay to buy down your rate and make it easier for you to qualify and just lower your payments. Okay, something that a lot of people don't realize. Right. Again, this is what origination fees are. This is literally a screenshot of my loan estimate. $13.95. I charge $8.95 for processing and $500 for underwriting. I am bold enough to say if they're charging more than this, especially if they're charging a percentage, they're ripping you off. Okay. Why do I say that? Because my team, my processing team, my underwriting team, they're bar none like the best in the business. Okay, we close loans fast, early, all the time. CTCs and clear closes within 7 days or less. Well, maybe not less. 5 days before, right? But average is going to be less time than most lenders, right? Because we're just good at what we do. Okay. And we're charging $13.95, which is less than most places. Right. So yeah, I think you're getting ripped off if you're paying more than this. Unless you find someone that's better than my team. Maybe there's someone out there, but I don't know. I'm willing to put my team against the best. Okay. All right. So why work with a certified veteran mortgage advisor? Now, this part right here is not really tips. There's a little bit of tips that can help you. But if you're done with the tips, you can always log off now. The rest of this is going to be more about the certification and why it matters. Okay. Number one, I invested time, money, and energy to become certified. I am very proud and take it very seriously. It's my designation on my name and my official title. So basically, I changed my identity. Like my name is now Larry Lee, VMA. Right. That's how serious I take it. Okay. I teach VA loan classes on a weekly basis because I'm that passionate about helping veterans and our real estate community become more aware of how important it is for us to for us to be educated and utilize the VA loan. In fact, I'm not blocking this stream or this video from anybody. Lenders are watching this. So I'm teaching other lenders about the VA loan. Okay. I know that if it helps a single veteran, anyone watching this, then I did my job. That's the way I look at it. That's how passionate I am about helping veterans. I'm willing to help the competition as long as they're helping veterans. Okay. Out of all VA appraisals that did not meet value, only 1% were submitted for an ROV or reconsideration of value, which resulted in at least a 50% success rate. What I mean by that is statistically speaking, out of all the appraisals for a VA loan that did not make value, right? Hold on, I'm trying to get this out here. I guess I'm stuck with this. Out of all the appraisals that did not make value, only 1% were submitted for reconsideration of value. That means out of 100 appraisals that did not make value, only one lender submitted it for reconsideration of value. And out of all the lenders, so let's say there's two of them. Let's say there's 200 loan officers and only two out of the 200 submitted reconsideration of value. At least one of them got the value that they needed, or they got more. So there's a 50% success rate. Okay. The point is, I'll be that lender. I'll be the lender that makes the submission. Okay. More than half of lenders don't even ask for a COE or certificate of eligibility. I mentioned earlier that's one of the first things I ask for. If they don't have it, then I actually try to get it for them. Okay. I make it the first thing we do, right? Because again, almost half of the lenders do not even mention the VA loan. Okay. That means more than half are not talking about the COE at all. Okay. I make it the first thing we do. Looks like we got a question. Let me check there real quick. Carter asked, can you send that outline to us? Yes, I will send the slides to you for sure. If you sign up through the Zoom, then you will definitely get an email with the slides. I do this for every single one of my calls. So yes, you will get a follow-up email with my slides. Okay. All right. I invest, actually that's going backwards. almost half of veterans don't even mention the VA to veterans. Like I said, I ask all applicants if they're veterans so that I can mention the VA loan. I'm actually hoping that they're a veteran. Well, okay, I'm hoping only because I want to tell them about the VA loan. I'm not saying that they need to be VA for me to help. I help everybody. In fact, I actually help exclusively first-time home buyers. I'm just starting to build uh, an audience and a following for veterans. Okay, but I do ask, hoping that they do say yes if I think they are, so I can talk about the VA loan. Okay, because it's such a cool loan, right? I do not charge a full 1% fee on the VA loan, like I mentioned earlier. I use a collective method, which charges a flat fee for VA loans, in fact, all loans. And this allows for a veteran to pay for other fees if necessary, like the pest inspection, so that the seller and or other parties do not have to worry about it. Because again, a lot of people don't like the VA loan because they have to pay for VA closing costs. Well, they only have to pay for VA closing costs if they're being charged 1% as an origination fee. Because again, the VA only allows 1% charged to the veteran. Everything else needs to be paid for by someone else, right? So I don't do that. I don't max out the amount that they're willing to spend. Again, if they're buying a $500,000 house, that's $5,000 that they're maxed out on. I'm charging $1,395. They still have a good $2,500 to spend on whatever it is they need to pay for, including the pest inspection, which again only costs $150. I think it's crazy that people make it such a big deal about the pest inspection. It's only $150, right? On the big scheme of things, that's nothing. Okay. I insist on writing a letter accompanying the VA loan offer to explain my credentials, how well qualified the veteran is based on their pre approval, and also insist on calling the listing agent to introduce myself and show why they should accept our VA loan offer. I actually do this for all loans if necessary. Okay. I also will literally fight for the veteran to get into the home they want to be in. Okay. And because of that, I believe I'm more involved. But the reason why I do that is not just because I want to help my clients get the house, but I also want to potentially create a relationship with the listing agent, because the more people I impress, the more people I serve and do a good job, the more opportunity I'll have because of referral partners. So I do that for my own benefit. Also for the benefit of the vendor, but I also do for my own benefit. Okay. I know how to structure offers with real estate agents that can help lower closing costs, lower interest rates, and even result on veterans or home buyers bringing absolutely nothing to the closing table. Okay. Again, it's just a little creative thinking, a little bit extra effort, a little bit of out of the box thinking that I provide, that me being a certified veteran mortgage advisor have helped me discover. Okay. If possible, I will have my team do a fully underwritten TBD or to be determined pre approval where we underwrite the application to the fullest extent without having a property. What I mean by that is if someone applies and they have maybe self-employed income or they're a little shaky, they're not sure they qualify, we will do a fully underwritten file as if you had a property. That way, we have the underwriter touch the file, take a look at it, and confirm this is a loan I can approve. That way, you can actually go out and shop with confidence, right? Uh, basically, you're conditionally approved, and before you make an offer and go under contract, the conditions will only be the property appraisal and final approval from the VA. Again, this allows for faster closing times and a lot more confidence and peace of mind for all parties involved. I can literally call the listing agent and tell them, "Hey, this person's already underwritten, so now it's just a matter of your house qualifies." But the buyer is already underwritten, so there's nothing to worry about on our end. We're basically done on our side. We're just waiting for the appraisal now, right? We call this the power play, like how veterans were trained to be prepared to serve and protect our country. We will provide the same effort to them and protect their loan. Okay. So this is a big one. Okay. The Certified Veteran Mortgage Advisor Community, managed by the Veteran Lending Council, is a national network and brain trust of like-minded individuals with one mission: to serve the veteran community at the highest level. Okay. My VMA community will not allow me to mess up a VA loan, let alone do a disservice to any veteran. Accountability is guaranteed. Basically, they're watching me and making sure I don't do a bad job, right? And I can't. If I do a bad job, they'll know about it and I'll be done, right? So there's accountability, there's a standard, there's eyes watching me and making sure that I do my job to serve veterans, because they hate nothing more than loan officers that do a bad job. So that makes me accountable. That makes me make sure I dot my I's and cross my T's. Okay. Also, I offer an opportunity for all clients to save $500 towards their closing costs. Like I mentioned earlier, the requirement is to take a simple home buying quiz, and that'll help you pass it if you need it. And I will help you pass it if you need it. In fact, I've actually had clients who are taking the quiz with me on the phone. Okay. If you're interested in learning more, please let me know. Right. And last but not least, I care. That's why you should work with a certified veteran mortgage advisor like myself, because we took the extra effort to just do a better job. Okay. So, any questions? Let's see here. Like I said, Carter asked if we're going to send the slides with outline to them. The answer is yes. All right, great. So if you have any questions, you can always reach out. My name is Larry Lee, 832-606-2193, Larry Lee at openmortgage.com. You can book me at homeloandate.com. You want to check me out, you want to do some research on me, you can always go to linktree/Larry Lee. That's linktr.ee/Larry Lee. And that will give you like all 100 of my reviews. And you'll find that I have a perfect 5-star rating. Okay. Or you can just Google me, Larry the Mortgage Guy. More than likely, you'll find me. I try to do that intentionally, right? So Google Larry the Mortgage Guy or Larry Lee Dallas or Larry the Mortgage Guy, Larry Lender, right, in Dallas, and you'll probably find me. Okay. Again, I talked about waiting to the very end. All you have to do is just take a quiz and pass the quiz, and then you'll get a certificate, and you'll be able to use that towards your closing costs. But just reach out to me if you have any questions about that. Right. I really appreciate you guys watching. And if you have a question, let me know. Okay. And I do want to say before I end this call that my goal is to help the home buyer community be as educated as possible, because I think there's a lack of education, and because of that, I think people are making bad decisions, and that's just bad. Right? It's not. As a loan officer, I get upset when I hear people making mistakes because of lack of education or lack of service from their lenders. So my goal is to help people understand the home buying process more. Even if you never engage with me, if you just watch my videos, subscribe to my content or whatever, you can ask me a question anonymously. I'll still do my best to help you, because I just think that in general, loan officers, for the most part, are doing a bad job of helping home buyers, and I want to change that. Right? So again, I really appreciate you watching. This Larry, the Mortgage Guy, your mortgage insider and certified veteran mortgage advisor. I'm out. Thanks, guys. Really appreciate it. See you later.